Hello everyone. Today on Market Makers, we have Amit Agarwal, the Group CFO of Raymond Group. Amit has more than 33 years of experience in the finance domain. Welcome, Amit.
Thank you, Glenn, for having me on your channel.
Pleasure. Thank you. So, Amit, let us start with some basic questions. Could you tell us what are those strategic initiatives that, Raymond Group has taken in the last 12 months, including the demerger of the lifestyle business?
Absolutely. No, thank you. I think, look, Raymond Group has post-COVID or during the COVID in 2020, we embarked on a journey which had created a 7-year roadmap. And the purpose of the 7-year roadmap was to divide this whole journey and unlocking the shareholders' value in a manner that first you start with a reform. The 2-year phase between 20 to 22 was a reform phase when we put our cost structure right. We took out 400 crore fixed cost out, and we moved from a net working capital from 112, 114 days to bring it down to 60, 65 days, releasing significant flows of cash. And at that point of time, we were having a 28, 2900 crore of debt. And the whole focus was to deleverage the balance sheet, which enabled to do so. And from 22 onwards, we were in a state of performance where we were very focused after the reform phase to get in a significant performance phase. And if you see the demonstrated performance for us is that for the last 12 quarters, the company recorded quarter over quarter a record revenue growth, EBITDA growth, and strengthening the balance sheet. Now, from a 24 onwards, we are on a true transformation phase. And this transformation phase is the various corporate initiatives which we undertook in the last 12 to 15 months is some of those actions. The action number one, we sold our FMCG business to Godrej for a 2,800 crores value, which translates into 80 times EBITDA multiple for that business, which made us completely a debt-free business and brought 1,500 crore incremental additional cash on the balance sheet for the growth of the business. And at that point of time, we also did the demerger of the business of lifestyle. Now, somebody may ask why the demerger? Because the simple question is the Raymond was becoming more like a conglomerate because it has got 3 lines of business. The line number one, which we are all known 100 years, we have been serving the complete man, our tagline, the Indian man, that 100 years we were into this lifestyle business. 5 years back, we started the real estate business because the Thane land, 100 acres which we had, we thought the best way to monetize is to do this. And now we have made it as a proper business, signing up JDs and such things into a real estate. And the third is the engineering piece, which we had a business traditional into auto components and the engineering consumables. And we acquired recently Mining Precision, which made us foray into the sunrise sector into aerospace defense. So actually you had the business, a Raymond Limited, which is a listed entity, 3 absolutely chalk and cheese business. And the investors like to have a pure play businesses. So considering that aspect, what we did was we initiated the demerger of the lifestyle business. Now, traditionally our lifestyle business had a working capital debt, so which was in the range of 1,800 crores. And when we sold the consumer business, the company was Raymond Consumer Care. So we sold on a slump sale the business. We demerged the lifestyle business from Raymond Limited and put it into the Raymond Consumer Care. So it came with a 1,800 crore debt, but it was based on net of taxes 2,200 crores. So it became a net cash positive company in the lifestyle business. And Raymond Limited was left with real estate business and engineering business. Now, in the month of July, we have also announced the real estate demerger, which will happen again. Any demerger in India will take 12 to 14 months. And at that point of time, you will have the second or the third listed entity. So the whole idea is that the investor community gets pure play businesses, lifestyle pure play business, Raymond Lifestyle Limited, Raymond Realty Limited with a pure play on the real estate, and Raymond Limited will have the pure play engineering business, which is auto components, engineering consumables, as well as aerospace and defense. So that's the whole thought process. And I think we have been able to demonstrate very new growth vectors across the business. Every business is a net cash positive business. Significant free cash flow generations are happening. Lifestyle business does not require any significant capex, but we can talk more about the business by business.
Sure, sure. So essentially what you've done is you've tried to create, a pure play businesses in each segment that you were present earlier with these demergers. So in essence, specifically, if you talk about, value unlocking benefits for the shareholders, could you throw some light on that?
Absolutely. So, when you have a conglomerate, it is very clearly in India, any conglomerate trades at a 70-80% discount, which when you have a pure play business, you can see any company. The demergers have been a typical methodology across the globe to unlock value. So that's number one. And I'll give you a simple example. If I look at it, some of the investors, institutional investors who have been saying that I have a mutual fund which is focused on consumer discretionary, and that fund would not invest into Raymond Limited because he saw there was a real estate play and an engineering play. So actually you are getting a large number of new institutional investors who will drive the value growth and value unlocking. So that's number one. Then number two, when you have a pure play business, what happens? You are able to create such a quality board which is focused on this. So for example, in this board of Raymond Lifestyle business, we have got 9 directors, of which 7 are independent, and the 9 marquee names like Vineet Nair of CEO of HCL, GC Chaturvedi, ex-chairman of ICICI Bank, and then many more like Narasimha Murthy, board member of NSC, Bennett Coleman, CEO Ravi Dhariwal. So we have brought such kind of people. And from the promoter family, Mr. Singhania is the one board member, and then the professional CEO, we have got the Sunil Kataria, the managing director. So to that extent, what we have been able to do is very, very clearly create a structure by which you can get into the growth. Second, now the value unlocking is also happening as we are embarking on new businesses. So previously, we have played a very big game in the wedding space. You see, in wedding space, we are by far the largest. If I take the menswear wedding space, our retail value, we account for almost 5% of that market, which is a 75,000 crore market. And the second player is in the range of 2%. So by far, you are leaps and bounds ahead. And your ability and the product and the customer distribution reach continues to enable to grow that business. But it is all a discretionary spend. Now, our thought was that why don't we get into some of the necessities, which is the consumption. So we have launched recently a sleepwear. Now, in the sleepwear, what is happening is, which is a daily consumption, and it is at a very attractive price point, which is 1,000 rupees below 1,000 rupees. So this is another growth vector. So what we are trying to say is, if you have a focused business, your important management, the board, everything starts to function in a very separate manner. And that is why this demerger was essential.
Got it. Now, as you mentioned about, the wedding business or the entry into sleepwear business, could you, throw some light on the business model of Raymond Lifestyle?
Sure.
As a standalone company.
Yeah, absolutely. So, and the beauty of the group has been always that we never intermingled either from a capital allocation, from a management allocation, except for very few people at the group. Rest everybody, we had a very focused team. And on one side of the business, as I was mentioning, 1,800 crore was the debt before this thing in the lifestyle business, but the other part of the business were net cash positive. So we were very clear that we are not moving cash from one business to another business. The same philosophy would continue. Now, as far as the whole Raymond business is concerned, you have 4 large segments of business in this. One is clearly the fabrics business, the suitings and the shirtings, which we are known of for ages. The second is the branded apparel with the likes of Park Avenue, Color Plus, Raymond Ready to Wear, Parks, and Ethnix by Raymond. And the third piece, which is the garmenting piece that we make on the white label basis for the top brands, be it Jaeger Moss, Moss Bros, tailored brands, all the big boys, we make the products for the suits. And the fourth piece is some of the high value cotton shirting, which we sell into B2B in India. So now let me first talk about the fabrics business. In the fabric business, if I take ballpark, almost 55-60% of that revenue is derived from weddings. And India, weddings are very, very large. To give you perspective, we are talking about 1 crore weddings every year in India, and the spend is 11-12 lakh crores. And in that, 20% is something which is goes on apparel. And of that 20%, the men get share of only 20 to 25%. Still, that number is very large, as I mentioned, 75,000 crores. So, to that extent, we participate and we enjoy a market share. The reason why we enjoy, because it is a discretionary spend and it enhances the social status of that family and the groom. So that is one very fundamental reason. So we have a very common saying India में हमारा कहते हैं कि इंडिया में कोई शादी नहीं हो सकती जब तक रेमंड का सूट नहीं सिले. So it's like that. So to that extent, I think we have got a great opportunity. Now previously the weddings were normally 1 to 2 days. Now the weddings have extended to 3, 4, 5 days. Now you have 3, 4, 5 days of weddings. You won't be wearing suit every day. So there is a natural demand for the products like kurta pajama, Indian ethnic wear. And that is one of the reasons that our dealer and franchisees who have spread over 600 cities all across India with 1,000 plus our TRS stores, all franchisee led, we kept on getting feedback that we should launch ethnic wear. So we launched 18 months back or so, ethnic wear. We have already opened 114 stores. Now we have seen a very good traction. So people were coming to buy the product. He was coming naturally to buy a suit. Now he extends it to buying an ethnic wear. And for me to get a franchisee is very easy because the franchisee model of Raymond has been a very successful model all across. So therefore, that becomes a very good way to segue into getting that. And our plan is to open more than 300 plus stores on the ethnic wear and continue to grow the range for India in terms of wedding. Now, India is not a small country, it's a very large country. What people like in North India would be completely different in the Western India. Similarly, so therefore, because we have such a great presence through a franchisee and we get the local regional knowledge, I get to know and prepare the fabric in a manner that what is really required in that region. So that gives us a phenomenal intelligence of the market and of what should we say real time, because the trends change. I will give you example in certain parts of the country. Hot yellow, pink. These are some of the suit colors which people wear in the wedding days. But that may not sell in South India. For example, South India would be absolutely like white. So I think that is a very good knowledge which we get. The second piece is the branded apparel. Branded apparel segment, which we have roughly 1,500 crore odd revenues, we believe comfortably you can double this over the next 3 to 4 years because कहते हैं ना जो दिखता है वो बिकता है. So we had very few stores. We had only 200 odd stores. Now we are on an expansion drive on there. We are going to open more than 600 to 700 stores over the next 3 to 4 years. And again, we'll be present from tier 1 to tier 6 cities. It is not restricted to tier 1, 2 or tier 3, 4, 5, 6 cities. Now, the whole focus was people had assumed always that a Park Avenue brand is always a very formal brand. I think the fundamental shift which we are bringing is about the casualization and also the premiumization. Because the two trends which is very clearly visible is post-COVID, everybody wants to move more a casual wear. It is less of a formal wear. So we are getting almost 20-25% of our range is getting into a casual wear. The other thing is very significant change we have seen is a whole premiumization. So I'll give you simple statistics that what used to be our average ticket value pre-COVID and to now, it has increased by 40%. There's no price increase of 40%, no inflationary increase of that nature. It is just that people are upgrading themselves. And I think India stands in the best of the spot right now for a consumerism because as the affluence keeps coming back into the country, and more people will move from an unbranded to a branded. And I think that shift of moving from an unbranded to branded is going to give a significant amount of advantage to companies like Raymond, who has got a very formidable brand. So that unorganized to organized is again a very, very attractive opportunity. As you would see with the social media influence, the whole consumer, consumer which is like 18, 20, 21, who is getting into this life cycle of getting into a job or going to the school, college and such things, he gets a lot of fashion and everything from the social media, and that helps the person to make choices. So I think that is something which is very, very critical for all of us to understand that how this is going to benefit us. And we are working on an omni-channel. So let's say we are fine, you will have online presence, but I believe the great opportunity for us lies in the omni-channel, because the omni-channel presence makes you what? You can buy online, return it at my store, or if the size is not fitting, you can get it changed and get it fitted. So what we are looking at is all convenience and comfort to the customer. And again, the brick and mortar store is not going anywhere. Let us be very clear. What we, especially the Indian men, they want an affirmation at all points of time in terms of buying a cloth. That cloth, apparel or anything that doesn't look good. And that is little less possible on an online channel vis-a-vis an offline channel. And if you see, every single person is very clearly visiting. And retail is a therapy. Let us understand, retail is very clearly a therapy. You want to come, spend time and buy. So there are two distinct types of retail customers. One who is a destined shopper. For a wedding and such things, you are a destined shopper. You will come, you will take the time and do it. As far as the apparel is concerned, or let's say a shirt or a trouser or a t-shirt, what happens? You've gone for a movie or something, and then you suddenly like a piece hanging, and then you go, and that is, I would not call it take it little extended. It is an impulse shopping. And that, I think, that is why the way we are opening the stores, for example, the ethnic stores are typically opened in the segments where you have the wedding purchase. Everybody is around the wedding purchase. However, in terms of the apparel stores, be it branded EBOs, we are opening in malls and such things, because that is where people come for all sorts of things and they have the ability to do an impulse shopping. So that's the reason why we believe it is a great opportunity to double that business. Third thing, if I look at garmenting, immediately post-COVID, we all saw there was a big wave of China plus one. Significant thing, everybody was moving into China plus one, China plus one. So who could be the biggest beneficiary would be India. And in India, what happens? Raymond gets a significant advantage because I have the fabric manufacturing capability and I have the garmenting capability. So what we call in our company is from the sheep's back to man's back. And that is something which enables us for the foreign customers to go and pick us up as a preferred supplier. And pre-COVID to now, we have from a 600 crore, we have taken the business to almost 1100 crores. Now, this is a business which we had a little bit of a foresight that the way things are happening globally, there would be some challenges somewhere in the world, and we might be able to take an opportunity. And there's no place as of now better than India for a sourcing destination. Actually, we are very proud to have such a stable environment which enables all the businesses to flourish and do a lot of international exports. So we decided to invest last year almost 200 crore of capex and incrementally taking our capacity by 50% more from a 6.3 million to 10 million capacity, making us the third largest suit maker in the world. Now, what happened right now, we see in the neighbor Bangladesh, who has been a big garmenter, where the customers would send our fabric to Bangladesh because they have a duty advantage and get the products from Bangladesh to them. Now, everybody wants to diversify. I'm not saying all the businesses will move, but some businesses, they want to secure a stabler country and a stabler supplier. So therefore, we are seeing some opportunity So our utilization of these 200 crore investments of 20 odd lines would become much more faster. So what I'm trying to say is that we are standing on these strengths, which enables the business overall to grow anything between 12 to 15% in revenue growth and a 20 odd percent on the EBITDA growth. Okay. One more lever. So we have identified some of the new areas of business. And the new areas of the business is, let's say, sleepwear. There is no organized sleepwear for men in the country. And sleepwear is such which is a consumption, because you can live with one less shirt, but you can't sleep without a sleepwear. So, and it is a daily consumption. You have to buy it, get sleepwear with that, and then get it washed, and the next day again wear. So there is such a large market, and quality product is always available, and the quality, if it is available at an affordable price. And I think what we gave the task to the teams was that bring the product which is sub 1,000 rupees, the old kurta pajama or the western wear in terms of t-shirts and shorts and such things. And I think that has become a very big hit for us. We just launched it. And I think that is a business over the next 3-4 years, it can become a very large piece. To give you a scale, even if I take a small 40 million people only to buy these things, it is 3 kurta pajamas at 12,000 crores of the business. I'm not saying we are going to get 12,000 crores, but even if you discount, even if you discount by 70%, still what is happening is you are getting a significant amount of revenue. Similar is with this whole definition of the complete man. We said from morning till night and night with the sleepwear, you have to cater to the needs of the men. Now, in that process, we are launching also the intimate wear, and which we think, again, going to cater to specific segments, which would also add to the whole basket of the products which we have. So overall, considering all these things, what we are doing and the strategies which are playing out, I think 12 to 15% revenue growth with 18 to 20% EBITDA growth. So like last year, we delivered almost 6,700 crore revenue with 1,100 crores of EBITDA. I think what we have said is we will double our EBITDA by 2028 in excess of 2,000 crores, 2,200.
Got it. And you spoke about the products. Could you also, share about the manufacturing capacities and the markets that you serve?
So in terms of manufacturing capacities, we have got 5 manufacturing facilities for the fabrics, 3 for the suitings and trousers, and 2 for the shirting material. So suitings, we enjoy a market share of close to 55-60% in the worsted fabrics in India. And by far, like we are doing 18-19 million meters. The second guy is doing not even a million meters. So you can imagine by far what kind of a scale you operate. And the shirting fabric, in terms of a branded shirting fabrics as Raymond brand, we have been able to create the market of almost 22 million meters, which we manufacture ourselves, which is cotton as well as linen. So just to give you the perspective that in terms of sustainability, we have been very, very clear that we want to stay in a sustainable environment and all natural fibers. So wool is a natural fiber, cotton is a natural fiber, flax is a natural fiber, and we have stayed on that. Silk, some of the blends we do. So therefore, our whole focus has been a big time on a sustainable products. Now, in terms of the manufacturing facility for the garmenting, we have in Bangalore, and that plus one in Ethiopia, because Ethiopia had this big duty advantage, which India lacks comparatively compared to the other parts of the world, be Bangladesh, Vietnam, and so on. And hopefully the FTAs get signed in the next few months. We should get a similar footing. We will be all on the same page. So now that is the manufacturing facilities. As far as markets are concerned, very, very attractive market in India. It is one company which sells its product from a 300 rupees meter to 3 lakh rupees a meter under the same brand called Raymond. You would not have any other brand globally. You would have 1,000 times price point and selling under the same brand. So that's like a unique advantage. So I think that is something which we talk about. And very important is also the quality. I think if you buy a Raymond product, it is of a superior quality. Trust, the kind of customers have the faith and trust in the brand Raymond, and the product is of an excellent quality. So this is also something which is fundamental. So India remains a great market with our distribution reach of 600 cities, and our products are sold in more than 20,000 point of sale across the country. And the customer age bracket, you can say from 12, 13 years of age till whatever, 90, 95, 100. So I think that's the kind of customer range we have, and all strata of society. We cater to all strata of society. Now, the other markets which we sell, we have big focus on the export market, which almost 15, 20%, 20% of the total revenue in the lifestyle business is contributed out of exports, which is of that, almost 45, 50% comes from the US, 30%, 20% from UK and Europe, 20 each, and then 10 odd percent from Japan. So that's the primary markets in which we operate. And with all the products we have, some of the neighboring countries, like we have got some 50 odd the Raymond shop through franchisees between Gulf, Bangladesh, and some of the other neighboring countries.
Got it. So, Raymond does have certain marquee brands under its fold. So how do you plan to leverage these brands in your growth strategy?
Absolutely. I think it's very simple. In terms of the brands, the fabric brands, phenomenal recall value. Every person in the country knows about it. Now, let me talk about the apparel brands, which is the Park Avenue, Color Plus, and Raymond Ready to Wear, Ethnics. So I think what was very important, which I said earlier, that कहते हैं जो दिखता है वो बिकता है. If I had a great product, but it was not available to you, near your home or near your office, how would you buy my product? So I think for us, the big thing ticket right now is going on is the retail expansion. From a 200 store before 12 months, last year we opened more than 150 odd stores. And I think we plan to open another 700 stores over the next 3 years. So the whole idea of a retail expansion is that it should be available near you. So example, I'll give you an example. Take a city like Ahmedabad or Hyderabad, which keeps creating every now and then a ring road every 4-5 years. Now, if the 5th ring road and to the center of the city is a 25-30 kilometer, you're not going to come every day to buy a shirt or a trouser. So you have to, and the shopping malls are coming up there. So in this, as I mentioned earlier, this is more an impulse shopping for an apparel. So that near to your home, then that mall, a store would become more handy. So that's one very unique thing which we are doing. Ethnics by Raymond, which we are opening a store for the wedding market, you have to open in the clusters, which is a wedding clusters. So it can range in a tier 1, 2, 3, 4, 5, 6. And in any case, we are present have been present for a long time with our fabric business, the Raymond shop, in the tier 1 to tier 6 cities. Now the same success of the TRS growth will be replicated in the EBO growth. So therefore, that is one. Second thing, if you are considered a completely formal brand, I think the stickiness, the attractiveness becomes lesser. So we have moved on and said at least 20-25% we will get a casual range, which is very nice, fancy shirts, printed shirts, t-shirts and such things which are coming, khakis. So that is another thing. Third thing is the premiumization. So now what we were selling normally a shirt to the 2,000, 2,200, there is a class of customers who are willing to spend 5,000-6,000 rupees, 7,000 rupees. For that customer, we are also creating a unique line. Now, all this put together, I think what we have been lacking or have not done so far very good, let's say 3-4 years back, was putting money behind the advertisement. Because in a discretionary spend, you need to spend money on advertisements. And actually, how do I create your desire? I have to create a desire that you should come and buy my product of Park Avenue shirt. And I think that is something which we have decided that going forward in the next 2-3 years, like last year, this year, and another 2 years, we would spend at least 60-70 crore incremental ad spend showing the ads of the product, the new collections, and so on and so forth. So there's an overall strategy in place. And look, for your perspective, we have got almost 12 million CRM, 12 million loyal customers of Raymond. Now, that is something which is a very powerful statement, because many of the airlines would not have this kind of a numbers as a member. So I think that also is going to, with the technology in the play, what we are doing is, if I know that you have been buyer of a bandi and you like these colors of bandi, then I would start giving you the promotions on those bandis, and I would not give you something which is, let's say, suit. Maybe once in 3 months I'll give you a suit if you wish to. But if I see that your pattern has been more of a bandi buying, vis-a-vis, yes, I do that. So that's the whole AI and everything, the whole technology piece is also into the play. And that will drive the revenue growth for this apparel business to double.
Essentially, what I see is you have a solid growth plan. You are entering new categories. You are expanding the distribution network. You are, increasing the ad spend as well as using AI. Now, amidst all this, what kind of challenges do you foresee in over next 1 to 2 years, and how do you plan to address them?
Sure. No, look, challenges. I think what we feel that we have a plan in place. Now, the only thing which can go wrong or can delay the whole thing is the execution, the pace at which we can execute. Something what we want to execute at a pace which will deliver a 15% revenue growth may come down to, let's say, going to 12%. But in terms of the fundamentals in place, we are not seeing any significant challenge. And as far as the addressing is concerned, like I'll give you a simple example. The reason why we are building such a large export business, because I'm not saying the Indian demand is going to come down, because Indian demand, the way with the whole thesis of Viksit Bharat in 2047, I think we have to do lots to get there, and all the policies, framework, and everything is all set to get there. So I think we seem very, very confident that the Indian demand consumption is going to be very strong. But it can happen 1 year or the other, it may not come to that. So then what we do, we have a very strong leg on the consumption or export market. The other thing is, we launched this consumption story of the sleepwear. The reason why the sleepwear consumption story has come is just to make sure that you have also one strong leg, which is a daily consumption, which is little away from a discretionary, which is a compulsory buy. So therefore, that is also a risk mitigating sort of a plan. So I think that is the way we have been approaching the business. Plus, it is a debt-free business, and we don't have a very large capex. The capex, as I said, is on the garmenting, in the enhancement of capacity. Rest everything, whatever capacities we have, we can continue to spend on 100 odd crores, 125 crores in terms of maintenance capex to keep up the trend. And Raymond has been very innovative in terms of getting new products, you develop the different type of fabrics with the different blends and such things, which gives us an edge. So I think 100, 125 crore capex there, and maybe 25, 30 crore every year you want to spend on IT side, because I think with such kind of a base, you will have to spend money on technology in order to take the benefits of the technology. So I think to that extent, we feel little confident that we will have in a very good spot in terms of that you will achieve the growth and you will be able to deliver on these things.
Excellent. Thank you, Amit. Thank you for taking out time for this discussion, and all the best.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.